Welcome to America's Commercial Real Estate Show, your source for market intel, forecasts, and strategies. Hello, I'm Michael Bull. Thank you for being with us. This segment is brought to you by CommercialAgentSuccess.com. This is really the ultimate training for commercial agents. I guarantee you will love it. You'll be more productive. If you know anyone who is a real estate agent, tell them about it. Visit CommercialAgentSuccess.com. Well, today we're going to talk about the multifamily world, apartment complexes, right? One of the things that I know a lot of our listeners and viewers are curious about is the impact of higher interest rates on investment sales market, and especially multifamily, because multifamily has seen such a huge increase, unprecedented increase in rents and values over the last several years. Will it continue? What are we seeing for cap rates on multifamily right now as interest rates have been increasing so quickly? Well, we have an expert with us. Please welcome my guest. It's Marco Welch. He's a VP of the apartment group at Bull Realty. Marco, thanks for joining us.
Thank you for having me, Michael.
All right, so that's, I guess, the question in everybody's mind. You're in here selling apartments, A, B, C apartment complexes in the Southeast U.S., and you're on the ground level. It looks like when we look at the results of sold properties from the systems, it looks like cap rates are really just almost starting to change. But what are you seeing in the real world on the ground every day right now?
So, Michael, in real time, what we're seeing is a big difference and big disparity amongst the classes. A and B class have a modest change in cap rate in regards to underwriting, where C class has had a larger gain. So B to A, you're looking at anywhere between a 25 basis points to 50 basis points increase. But in the C class, you're looking at anywhere from a 4 point to 1.5 points of an increase in cap rate.
And why is that, Marco? Why there's less of a change on the Class A? It's just the quality of the assets? Or is it the financing demand? What makes the difference?
Well, I think, Michael, that the banks are influencing that, or the lending institutions are influencing that increase. They're underwriting the risk of having a C-class property. Historically, we've seen delinquency a lot higher in the C-class versus A and B class, and banks are charging for that risk.
Yeah, and when you look at an increase of 25 to 50 basis points on Class A apartments, I think from the outside looking in, people in other sectors may think, wow, that doesn't seem like that big of a change. Are investors really looking at multifamily rent growth as part of that underwriting? What are your buyers thinking about rent growth moving forward?
Well, in the Atlanta market, over the past couple of years, we've experienced record rent growths, 18, 20% rent growths. Now there's a more modest prediction in terms of rent growth. We still see continued rent growth. Most of the investors are penciling in about 8% rent growth, which is still very strong, probably stronger than other sectors. But they're expecting it to just kind of taper and level off a little bit.
Yeah. And how about interest rates obviously impacting cap rates and underwriting on investment sales, but also interest rates are impacting home loans and home buyers, right? Are rising rates helpful for apartment performance? It would seem like some apartment dwellers, tenants would that might want to buy may be pushed away because of the higher rates and have more tenant demand?
I think you're exactly right, Michael. Mm-hmm. I think what we'll see is that the rising rates for homes will bode well for multifamily. I think you have a lot of potential buyers that now will become renters, mm-hmm. especially in that B to A class submarket. Right.
And one of the things that from the outside looking in, I want to get your opinion on this is, one of the things I was concerned about when I saw the so high increase in the rents every year, like, what about affordability? Who can afford a $2,500 a month studio, or how many people can afford these higher rents. But we've had a lot of wage growth lately, right?
Yeah, well, due to inflation, there's been a lot of wage growth lately. And I strongly believe that apartment owners are feeling the pinch of inflation as well. So they have no choice but to raise the rents. If you look at the cost of insurance over the past year, pretty much doubling, and some markets tripling. If you go to like a market like Houston or just in Texas in general, when you've experienced some more natural disasters, their insurance rates have really gone through the roof. So apartment owners have to raise rents, and I think that overall, as an economy, we're just seeing growth in income, also just growth in pricing, and I don't know if what the feds are doing will definitely decrease that in a short period of time. So I think that rent growth is going to be here to stay, and I think that wage growth will fuel the rent growth.
And Marco, where might be some opportunities for investors as far as type or size or class of properties?
I think that there is a huge opportunity in the Southeast market, and I'll speak to Atlanta specifically. If you go to some of the suburban markets, maybe some tertiary markets that are growing due to the logistics, places like Amazon that are adding employment there, you're seeing a lot of growth in those tertiary markets. You look at places like Warner Robins, you look at a city like Augusta that was almost dormant a few years ago. They're having growth. There's more demand for multifamily there. So I believe that those are the areas that I will look to for opportunity.
And that would be any class apartments in those type of markets, or?
Yeah, your core plus properties in that market, I would say your B to A class properties, even C class properties. Yep. So all of the classes experience growth there.
And the operators that you're talking to them every day and analyzing these properties, you mentioned that they're having rising insurance costs and things. What else is kind of troubling or on the minds of apartment owners with their production, the operations?
Great. So it depends on which class of apartment that they own. If you talk to a C-class owner, I think the covert rent moratorium has wreaked havoc on that market. You have delinquency that's still lingering. Some municipalities are slower to evict. That's an issue. Looking at A-class property owners, there's been a lot of A-class properties delivered to the market and scheduled to be delivered into the market in the short term. So there's definitely absorption issues there. And the same thing with B-class properties. You have some B-class properties, you'll have some absorption issues. You look at not a big price disparity between leasing a B-class, and you have the opportunity to lease an A-class property. You have tenants that may just lean towards the A-class property. Those are probably the biggest issues that I see.
Yeah. It seems like the institutional investors and all investors have allocated more funds to multifamily over the last few years. Is that changing at all? What do you see the trend-wise there?
Well, there's definitely been a pause of some sorts with the rise in interest rates. But I think that overall, there's still strong demand for multifamily. The fundamentals still are very strong. What I believe will happen is you'll see a lot of these institutions have longer hold times. If you look at what's happened over the past 3 years, properties were trading every 2 to 3 years. Now I think you're going to go to like a 5 to 7 year hold period. So there'll still be strong demand, but to achieve those IRRs that they need to achieve, it may take a longer period of time.
Yeah. And what are you seeing for exit cap rates in underwriting? Any trends you notice there?
Yes, people are definitely adjusting their exit cap rates anywhere between 1.5 to 2 points if you look at C-class. C-class primarily traded on average around 5% cap rates last year. I'm hearing investors underwrite to a 7 cap rate exit.
And that makes sense if interest rates keep rising the way they have been, the way they're expected to, right? But to offset that in multifamily, if you have this huge rent growth, right? You're talking about. You mentioned some of them underwriting 8% a year. That's pretty massive.
That's true. That's great. And one important thing to note is that while that cap rates may be increasing, value has still remained strong in multifamily. There's been such a significant increase in value over the past 2 to 3 years. You're looking at like 80% value increase on average. So there's still a lot of value in these assets. If you're currently a holder of multifamily and looking to sell, now's still a great time to look at selling.
Yeah. And Marco, what are you seeing in the financing world for multifamily today related to agency and the various lenders out there?
Sure. So I'm seeing agency become more prevalent as their actual rise in interest rates hasn't been as extreme as some of the other forms of lending. You look at the debt funds. Debt funds increased from being 2.5% to 3% to now being 5.5% to 6% in interest rates. And then also in addition to the interest rates rising, they've decreased their loan to value in which they're willing to loan to about 60%.
And what was it before?
It was between 65 to 70%.
Yeah. That's interesting. So agency, Freddie, Fannie still active?
Yeah, Fannie and Freddie are both really active in the market, and they have a lot of capacity to get deals done.
Yeah. So what would you leave our audience with to think about for multifamily moving forward?
What I would say is that multifamily is going to remain a strong sector. I believe you just have to be a little bit more conservative with your underwriting, but I believe there's still a lot of value in multifamily, and I believe you'll still see rents increase and you'll still see values increase over the upcoming years.
Yeah. Marco, thank you very much for being on the show.
All right. Thank you for having me, Michael.
All right. And thank you for joining us around the country. Please let us know what you think. We appreciate you sharing the show and reaching out to us. My email is michael@bullrealty.com. Thank you for watching and thank you for listening. Until next week, be sure that you always lead, learn, and laugh, and join us for America's Commercial Real Estate Show. America's Commercial Real Estate Show is brought to you by Buxton. Take leasing, site selection, and due diligence to the next level. Make the right decisions with on-demand mobile data. Visit buxtonco.com. By Bull Realty. For proven commercial real estate asset and occupancy solutions, contact me. My email is michael@bullrealty.com. By Commercial Agent Success. Expert-level commercial real estate broker training. Cloud Access 1 up to 21 one-hour videos. Visit commercialagentsuccess.com. Thank you for reviewing, subscribing, and sharing America's Commercial Real Estate Show.